Hi guys, how you doing? Piotr here, this is LiteFinance Global YouTube channel and it's my pleasure to be with you today again. We are going to make the FX market update with the very interesting week ahead, and I've prepared a few very interesting charts for you, more details on my left side. So without further ado, let's jump straight into the video. So new month, new opportunities. That is worth to mention is the last month of the first quarter, so a little bit more fireworks could be in place, so it's worth to be very, very careful, okay? We start with euro dollar here, and we have the monthly chart. I'm going to quickly place few lines for you. So we are going to be at the same side. To be honest with you, it's quite important, and I'm going to quickly and briefly explain why these lines are here and what we might eventually expect when it comes to the euro dollar based on the monthly chart. So there you go. We are on January and February, we are retested the breakout level from here, right? So there was a retest, and February it was a strong rejection. So there is a possibility of the creation of the swing high, and there are two very important levels. First one is a level around 109.30 to just finish the job and to make this swing possible like this. All right, and the second one is related to the almost yearly open, all right, but also that's the latest weakness high, and it was broken in the February, so meaning that the market overall got back below the yearly open, and in that case we are talking about the level close to 107, 107.40. Okay, so we have the zone 107.40 up to 109.30 as a possible supply zone based on the monthly chart. When it comes to the possible demand, there are quite few levels we have to focus on, and I'm going to place one more line over here. Okay, so the first thing first, the level close to 105, 104.50, and then again 103.50. But the important thing in my opinion here is that if we are going to break the psychological 105 level somewhere around here, that's where we stopped. That's where we stopped the fall from the February. We might see parity going on again, so parity and party going on again. So in that case, switching to the lower time frame, to the weekly chart, I would look for right now what is going on, where we are going to be from the weekly chart perspective, and I would look for the two levels related to the previous price action. So if you are a seller in a medium term, as I mentioned, from monthly 107.40, 107, 107.40, and then again around 109.30. And if you are a buyer, so from the weekly chart perspective, look where we stopped. That was the weakness. We've seen the breakdown here, and that's where we stopped in February and last week, right? So I'm not surprised seeing this type of the bounce. So as of now, if you are a buyer, that's your buying levels, and the first one already tested, but the first one lower is if we are going to see the spike to the downside around 104.50 and 103.50, that might be your buying levels. As of now, with what we've seen, I do expect a little bit of the range, either below between 105 and 107.30, or even 105, 1,950, maybe 110, and that's how I see it. So medium term, you are trying to fade the rallies, or you are trying to buy the dips. Okay, let's switch to dollar yen, and there you go, monthly chart of the dollar yen. And here also we have quite significant development. It might not be one-way pari. We haven't, if you watch my FX top picks for 2023, we quite haven't hit my lower target yet to be able to buy the dip, and we've seen the rally much earlier. But anyway, where we are. All right, so let's place few lines. Of course, we took out the yearly open around the level 131, all right, with the strong February rally, because again, inflation is back to the town, and we took out the January high. The thing is, what is important, that we are still within the latest demand zone, because from here, as you can see, from here, we've seen the latest rally and strong rejection. So as of now, where we stopped in February, it's mid of that range. So market is trying at the very beginning of the March, trying to make the pullback. So let's place another line over here. Okay, so as of now, 137 and 131, that's the significant levels. If we are going to break higher, the next one is a bottom of another breakout. In that case, we are talking about the 138.70. And finally, medium-term target 143.60 to the upside. To the downside, still, I think that the break we've seen here with the lower shadows and stop count, that's the first level of the possible support, 128.20. And if we are going to go lower, I have the zone in between this upper shadow, 125, and the level I discussed when it comes to my top picks level around 122, 121.70. So it could be the case. So let's check one thing. How high can we go to make 1, 2, 3 and retest 122 level? Looks like we might test this break, the latest breakout, 143.60. So if you are a buyer, you are waiting a little bit of the pullback and trying to hit that level. If you are a seller, you have to be a little bit more patient. Let's switch to the weekly chart here. There you go. As you can see, also from the weekly chart perspective, we are retesting latest weakness high, and we trying to reject that level. But I think we might see a little bit more to the upside and retest of this swing high over here, 141. We discussed also a second ago. That could be the thing. So buying the pullback on the weekly chart down towards 130, 133 could be the name of the game here, and you have to be patient if you are a seller. Don't forget FOMC, don't forget inflation fears. So the dollar is trying to hold the ground. Okay, the last one today. GBPUSD, cable, and what we have here on the monthly chart. That's the latest weakness, all right? That's the, before we've seen the huge move to the downside, that's the latest rising candle. And as of now, half of that range being tested 3 times already, so we created nice swing high with rejection in February, all right? But to the downside, we hit some significant levels, which worked out as a support previously, okay? So in that case, we have a little bit of the range in between 124.40, 125 and 118.50, 118, let's say, from that monthly perspective. I like the price action we've seen yesterday, and as long as we are above this low, retest of the high of that range could be in place. In case of the further move to the upside, in case of the upside break through this V formation, all right, we might see attempt to test 131.50, and in case of the break to the downside, we might see retest of 116.40. So looks like the upside is much more attractive, at least for now. And so let's have a look what we have when it comes to the weekly chart. And here we go. That's the weekly chart, and a lot of upper shadows going on. So a little bit more downside from here could be the name of the game. Retest this breakout level. So in that case, we are talking about the level related to the 116.40. So it could be 1, 2, 3. Okay, let me show you. It could be 1, Riley, 2, and 3. Okay, and from here, so it's like it's like 1, 2, 3, and from here trying to go a little bit higher. Well, we will see. So if you are a buyer, you are patient waiting for levels close to 16.44. If you are a seller, then you might switch to the lower level and try to navigate where we are, try to find a good supply, and try to attack this short side with the 16.50 as a target. Guys, it was my pleasure to prepare this video for you. Again, like, subscribe if you haven't already, leave the comment below. Stay safe, see you around, take care and goodbye.